And welcome back to Bitcoin Advisors channel. My name is Chris, bringing it to you here from a lovely little Monday, the beginning of April, the beginning of the quarter. We've got a lot to talk about. I'm going to try and make it short and sweet. So again, Q4 GDP came out positive, so crisis averted, recession not here yet. But I want to remind everybody, the guy Dwight from 42 Macro, what he was saying is in order to see public sector inflation, we have to have private sector deflation. And I think what he's talking about in the private sector, he's talking about the banks and the hedge funds. For their assets need to go down in order to see public sector inflation. And what that means is when the public sector starts to make a lot of money again, and that is, when the private sector deflation happens, then that will bring in the rate cuts and the stimulus. And right now, as of now, the Fed says, hey, no rate cuts this year. What happened? Economic data that came in today. And by the way, a lot of exciting stuff is coming in for Bitcoin right now. So don't leave if you just started watching this video, but it's important to know that the S&P Global Manufacturing PMI was lower than expected. That's bearish for the dollar. And when the dollar goes down, risk assets tend to go up. So we used to say the trend, let's see if that trend can actually continue. And at some point, I do think the dollar is going to bounce from this region. However, we're getting declining volatility. Another sell signal to be fair, and we are in the bearish control zone. So could it take another leg lower? Well, where was our 6-month target? Down to about 98.81, and I do think that could happen. If that does happen, well, I think risk assets and stocks will definitely benefit from that. So back to what I was saying is, look, for the public sector to start winning again, we need to see stimulus. And I think here's what nobody's talking about. I think and this is on CoinDesk, the U.S. Federal Reserve real-time payment system coming in July. So what is it? The U.S. Federal Reserve is activating its long-awaited real-time payments system in July. The central bank said on Wednesday, so this article was, I think, mid last month, March 15th, in fact. And that's marking the transition that some have seen as a government challenge of the crypto sector's instant transaction advantages. The FedNow service meant to solve existing delays for financial transactions between institutions. Essentially, it's Zelle payments for banks, right? And probably hedge funds and anybody with a big pocketbook, right? So in other words, I think this is the gateway drug to the Fed's CBDC. And that CBDC is coming out, and I think it comes out in a form like this. They're going to go, hey, there's a world crisis. We need to stimulate the economy. Everybody download the FedNow app and get your first free $5,000 worth of stimulus money. And once everybody downloads the app, starts using the software, again, this is just the gateway drug to get people into CBDC. And as we've been saying on the channel, it's going to be, financial freedom with Bitcoin or financial oppression with central bank digital currency. So watch out for that. And that is, though, in fact, the way I think possibly the stock market could avoid another major crash. What I want to bring our attention to is, and again, private sector deflation would say, hey, look, the S&P 500 comes down to our target of about 32.26. So, first warning sign, 36.26. So what I'm trying to say is if the stock market goes down and Bitcoin goes up and they launch a CBDC, I think actually that'll be the gateway drug for a lot of people to buy Bitcoin. And Bitcoin could hit some of the bullish targets I'm about to show you. So watch out for S&P 500 or NASDAQ just coming back down and breaking into this channel. As long as we're above there, I mean, it looks bullish, guys. We hit our target. In fact, we closed above it last week on the daily time frame. Volatility is low. We're about to expand. Stokes are in the critical zone. We're back in the bullish control zone after rejecting the bearish control zone. So to be fair, I think we do have another leg higher in the stock market, especially with the dollar doing this today, guys. The dollar's absolutely going kaputs, whatever that means. But that would be a bearish engulfing candle if we close anywhere here or lower. And that would imply a target, down to the bottom side of the range here. So I'll just draw that one out. And the dollar absolutely gets obliterated. And what is oil? Oil's been the talk of the town on the news there. Let's see if my Brentonium, my Brent is on my chart somewhere for us to easily access and take a look at Brent. By the way, gold is reaching up for 2,000 an ounce. Gold reaching for 2,000. Holy smokes, it's a gold digger's dream. Watch out for gold. And volatility is declining, to be fair. And I've been saying, hey, the only way it breaks 2,000 is a world catastrophe, but everything is fine. Look at the stock market. The bond market's coming down. The 30 years finally back below 4%. And some of these UK markets, the German markets, the UK 100, the FTSE. FTSE made a new all-time high and a higher low on the daily time frame. Let's see what the weekly looks like. The FTSE, where all the feet go, looking bullish. But could it be a bear trap? Only time will tell. I don't look at that one that much. How's Tesla doing? Tesla getting rejected at the green 55. Might have some more in the tank. And what was I looking for? Brent. Do you want to know if inflation's going to go higher? Just look at Brent. I got to put that with gold somewhere. Where's my golds? My commodity sector in my chart. Guys, TradingView is amazing. TradingView does so many things. You literally, you can become a TradingView genius with TradingView alone. Just doing a little research around TradingView, finding the different assets. If I can find the gold here. My hat's off to TradingView. If they had a stock, I would say let's buy some. It's not financial advice, of course. Come on. Okay, there it is. There's my golds and my silver and Verizon stock. Oh, man. Sometimes, though, it does this thing. It jumbles around all my stocks and all my coins. And that's if you hit this button. It sorts everything by alphabetical order. You don't want to do that. All right. Let's look at Bitcoin because that's why we're all here. Who cares about gold? Who cares about silver when Bitcoin is up almost 80% this year, and we had one of the most bullish signals of the year fire off just last week. And I've been saying, keeping an eye on this, and keep an eye on this, keep an eye on this. Why is it? Well, historically speaking, every time that this has happened, nope, that's not the one I wanted. Sorry. Nope. This is the one. Look at all these lines. Let's take some of this off. Okay. The Gaussian channel on the weekly time frame. Interesting. BLX is like a week behind. But so on the weekly time frame, this candle will probably show up tomorrow. But you can see it on spot price action for Coinbase and all the other exchanges. I like this one because it has the longest history on Bitcoin's price. But what do you know? BLX, the index, the oldest history. So what is this to say? So we did close above the mean band. Technically speaking, we should be looking for a ride up to 32,400. And you know this, when the bull market starts to go with Bitcoin Bitcoin can rip like like a monster. So who knows how high it's going to go. But I would expect in the short term, at least a move up to 32,500. Now I will give a caveat to that and say, hey, look, if we start closing weeklies back below these prior wicks or even below the mean band at 27,500, then I would say move invalidated, right? But the last time we closed above the mean band, we got a free ride to the top. Closed above, free ride at the top, and it went for more there. Let's see if there's any similarities when it comes to the weekly time frame. So the Stokes at the time of, we're in the critical zone. So that goes back to oversold and overbought. You know, people think, oh, the Stokes are up here. It's time to sell. It's time to sell. No, that's actually when price starts to really get going. And what do you know? That is where price is really starting to get going. And sure, this thing could get lift off. I mean, look how high it came in the last pops there. So we're not even at 90 percentile yet. Definitely could have more to go. So look, closed above the mean band there. Closed above the mean band, got a free ride to the top side, free ride to the top side, free ride to the top side and a rejection and then blast off. So, hey, want to be looking for that scenario and be prepared for that. Extremely low volatility on the weekly time frame, but that was not... So that, and to be fair, there was a lot more volume on that candle, it looks like, compared to back here, their last weekly close. I'm going to look at it on spot price. Yeah, pretty low volume. That's the only concerning thing here, guys. And there are a couple other warning signs, such as the daily Stokes, which are continuing to be postured down and will remain down as long as we're closing it below 28,649. Now, however, here's what I would say. If we get expansion on daily volatility, price is going to move 20%. So what I'm hoping for, still hoping for this scenario to play out, and that is a move all the way back down to this green box. I would love to see that happen, but right now, I hate to buy at the tippy top and go long, especially with kind of bearish divergence on the RSI. We're getting kicked out of the bullish control zone. It is just, why fight the trend? Back onto the trend. What happens when you get above the weekly time frame Gaussian channel? When you close above the mean band, you get a free ride at the top of the band. You close above the mean band. So it's only happened 1, 2, 3, going on the 4th time. So 4 times makes a trend, right? Right? No, it's 3 times makes a trend. And alongside of that, you have a dollar that is getting obliterated. I mean, the dollar got absolutely smoked last week. So, a lot's at stake here. And here's where, I'll be letting go of positions is below here, 26,500. If we start to lose that region, I would even say this region right here at 27,000 on a closing basis, but on a wick basis below here at 26,471. That would be my higher term time frame note to say, hey, look, coming down to the green 55 at a minimum, that I would consider a major buying opportunity if we did get that chance. We have low volatility and pretty much perfect postulating for more upside. But I think the bears are really trying to push Bitcoin down this morning. We did get a run back up to 28.5. And it did fail. And then on the shorter term time frames, again, you can see closed above the mean band, free ride at the top side of the band. And let's do a little short term trade analysis on the 15-minute time frame for those of you out there trading the shorter term time frames. What am I looking for is the yellow to cross to the upside as it is about to do. And something to note as well is usually it's not the first cross to the upside that gets the move. It is the second cross. So just as over here, let's see, was it the first cross to the downside or the second cross? In fact, it was the second cross. There was the first cross to the downside. There was the second cross, and that postulated a pretty big move on the 15-minute time frame. So what else to know? I saw on the 6 hour an incredible buying opportunity this weekend. In fact, I did take it off of 27,575. The green 55 has rallied off of this point, just like it did on the 4 hour. You know, you'll see a lot of confluences between these time frames. The 4 hour, you know, technically, okay, there's a bounce. There's a bounce. Sometimes it shoots through, and same thing here, shot through it, but then picked itself back up for a little bit of a bounce. Now, on the other side, what do we have here? Well, the hourly time frame crossed up once. Crossed up. So this is the second cross down. So if we can uncross ourselves on this 21 and 55, that's the yellow line and the green line, then I would goose the odds in the favors of the bulls, and just bringing us back to the monthly time frame, which I hope I went over, you know, some of the more macro stuff here, but essentially what I'm looking for based off of the monthly hidden bullish divergence, if we go based off of the 4-drive philosophy, which the 4 drives comes all the way back, I believe, from this. We'll have to look on BLX again. BLX. The 4-drive philosophy, and this is crazy, and, you know, it's not a guarantee by any means, but 4-drive philosophy says we're going to get a run at some point up to the 1618, coming in at 64. And just looking off of this, you know, bullish closure, the fact that April is typically a bullish month for Bitcoin, and there's no major economic news. The next Fed meeting isn't until May 3rd. So April, springtime, everything's green out. The summer, it's going to be hot this weekend. I think 90 degrees out here in California. Going to take the kids surfing. I'm feeling good about Bitcoin, guys. I'm feeling good. And I'm even feeling good about Ethereum. As I will note this, and I'm going to cut the video off because now I'm going longer than expected. But what did we say here? Looks like a double bottom to me. Looks like a perfect bottom. Double bottom. But what is price likely to do at the top side of the range? Well, reject and go back down. However, I would mediate that. And you can see Ethereum's popping up today as Bitcoin dominance is going down. Usually that is the first one to go. It's a chocolate waterfall, right? Everything goes to Bitcoin first, trickles down to Ethereum, and then all your party coins below there. Now, if we do start to close a daily back below, I would say this level right here, or this wick, then that's what I would say, you know, it might goose the odds in the favor of the Ethereum bulls, because Ethereum is doing this right now at 1825. Something else to note on the 5-day or on the, on the daily time frame, we've come up and tested this level right here at 28,838. Call it 29, 28.8, 3 times, 1, 2, 3, 4 times. Call it 4 times. Fair enough. Do we test it a 5th time and reject? I don't know, but I do suspect we're getting to that point where this piece of glass is about to break to the upside, and if we do see Stokes flip up today above 28,676, that would be good enough to do it for me and call the $32,000 target the next kind of level up. And there I would expect some kind of a pullback. Other than that, guys, that's it for today. I'm going to bring you some more price action tomorrow. I hope you enjoyed the video. If you did enjoy the content, make sure you throw a like down. That's all I'm asking. And check in with us tomorrow. Take care. Have a blessed day.